You run a company that is particularly focused on African entrepreneurs in the SME sector. Why do the SMEs in Africa need finance, and especially why do they struggle to access it?
Well, that's right, Larry. We invest in African entrepreneurs to build successful businesses and generate financial and social returns. And the reason we do that is because we think entrepreneurs are absolutely critical at this point in time to Africa's development, to job creation, that Africa is really at a turning point, and that small businesses can drive job creation and make a substantial contribution to economic development in Africa.
Why is it particularly hard for entrepreneurs in this continent to access financing vis-a-vis, let's say, in Europe where you are?
Well, there are many barriers to entrepreneurs building small businesses, growing those businesses, and access to finance is probably the most severe of those issues, and it's probably the main reason why between 60 and 80% of small businesses in sub-Saharan Africa fail within 2 years of launch. Typically, bank financing is not available to small businesses in Africa. Where it is available, it tends to be quite short-term, it tends to be very expensive, and it doesn't really provide the flexibility that a small and growing business needs at its early stages of life. We believe at Jacana that private equity is very much the answer to that problem. That private equity can provide the crucial combination of growth capital, but also an injection of expertise, a building of management capacity, which is very important in businesses at this stage of development. And what we're doing at Jacana is we're really taking the traditional model of private equity and adapting it for the African environment, which was very important.
Why is it that the traditional private equity model does not work for Africa, and how have you turned it around, as you're saying?
Well, the traditional model for private equity investing doesn't really work in Africa, and the reason is that small businesses need a lot of management support. They need a huge amount of resource to be provided alongside the capital. And typically, the private equity funds that invest in small businesses are themselves small, they have small management fees. So exactly at the point of the market where businesses require the most injection of resources and expertise and time from their partners, that's an area of the market where the traditional private equity model doesn't really provide those resources. And that's the crucial issue which we're trying to address in a new model with Jacana for private equity in Africa.
You have investment directors, people who are very well experienced in this sector in Africa, and they work pro bono. What exactly do they do?
Well, that's the crucial difference, Larry, is we create blended teams. We have local teams on the ground in Africa. We have invested already in 18 portfolio companies. We've invested about $20 million. Those companies employ 1,300 people. We have teams both in East Africa and West Africa covering 6 countries. And what those teams have is they have knowledge of their local markets, some transactional experience in their local markets. They have good contact networks for sourcing deals and supporting portfolio companies. But today, in private equity in Africa, those teams lack experience in private equity investing because the industry is at a very early stage, and therefore they lack the track record that international investors really look for. What we have at Jacana is we have a group of investment directors who are private equity experts who spent between 20 and 30 years working in private equity in Europe, and we second those investment directors to the local teams on a very hands-on, active basis. So at Jacana, what we have when we meet with entrepreneurs in Africa is we have a blended team where a 20-year private equity veteran from Europe will be working alongside a young African investment manager to structure great transactions and work with entrepreneurs in the region.
Talking about the size of transactions, I hear a lot of private equity people saying SMEs in Africa don't have the capacity to take in the amount of money you might give an SME in Europe. So typically, what is the amount of transactions you do? How many $1 million, for instance?
Well, we're really focusing on what we call the missing middle of finance for small businesses in Africa. And for us, that means investment transactions between $1 million and $5 million. Those are businesses that typically might employ between 10 and 250 people. they might turn over between $1 million and $5 or $10 million, that kind of size.
All right, that is good enough. You have several examples. One that sticks out for me is Realtex Tarpaulins in Kenya, where I come from, and it's a fascinating business supplying relief materials to humanitarian sectors in Kenya. What did you do with this company?
Yeah, Realtex is a very exciting business. We invested in Realtex recently. It's a business which works in the emergency relief sector in East Africa. It serves clients like UNICEF and the Red Cross with tarpaulins for the emergency relief business. And the interesting thing about Realtex is it was founded back in 1996. And what the entrepreneurs at that time recognized was that there was a big gap in the marketplace. There was an industry where 60% of the world's relief efforts were being directed towards Africa, but actually less than 1% of the materials used in those relief efforts were actually manufactured in Africa. And that's a very typical situation that we find actually looking at particularly manufacturing businesses in the region. Is we find growing market demand, proven market demand, but a lack of capacity for meeting that demand in the local market, and products that are being made in China and India being imported into that local market, and particularly in the emergency relief industry, that obviously leads to delays which can be critical. So Realtex has built a very nice, very successful business over the past 15 years. It has a state-of-the-art factory just outside of Nairobi, employing about 250 people. And it's a victim today of its own success in that the demand from customers is growing very rapidly,
right,
and the company was really lacking the financial resources it needed to be able to capitalize on that demand. So we've made a $2 million investment together with the Belgian government's development finance institution called BO, and that investment is going to double the production and warehouse capacity of the business and enable it to meet that rapidly growing demand, and in the process of doing that, create another 80 jobs at the business.
And you have another example, which is the Diagnostic Center in Accra, Ghana. But the thing I want to finish off with is, does investing in African SMEs pay? Because you're in business after all.
I'm sorry, could you repeat the question, Larry?
Does investing in African SMEs pay for you as a business?
Absolutely. The motivation of the founders of Jacana when we founded the business 4 years ago was absolutely to make a contribution to the problem of poverty in sub-Saharan Africa and address this issue of job creation. However, we firmly believe that the only way to do that effectively is in a commercial for-profit model. And we see opportunities all over the 6 countries that we operate in today in all kinds of different sectors that we think are very interesting, where we see fast-growing companies,
right,
where well-structured capital can really make the difference and create a lot of jobs.